Hello, welcome to another episode of Trace and Tell with Ade and Joe. It's nice to have you guys here again, as usual. Today we'll be talking about a bunch of stuffs, and in a way, kind of like related to some of the stuffs we talked on the last episode. I have my co-host here, Joe. How have you been, Joe? What's up?
Yeah, man, doing good. Some good news in the crypto investigation world the last week or two. So, yeah, excited to explore those stories.
Cool, cool. I think just kind of getting straight into it. I think I won't call it elephant syndrome, but it's kind of like the biggest, well, one of the big stories of the week is the fact that the US seized approximately 15 billion in Bitcoin from a Cambodian business, which is obviously related to a lot of things. You want pay, pig butchering, human trafficking. It's sort of like the basket of what you don't want.
Yeah,
And
exactly.
yeah, what's the story like? If you'd like to share on that thing.
Yeah, I mean, just tying together some other stories we've already talked about on this podcast. Hue Pay, of course, huge Southeast Asian uh, laundering conglomerate and very Chinese influenced, and yeah, tied into the biggest crypto seizure ever, I believe. So 127,271 Bitcoin, roughly around $15 billion, depending on when you mark the date of price of the Bitcoin. But yeah, interesting kind of story where it seems the United States government and also the UK government were involved in seizing these assets. And there is a bit of a mystery to how exactly this was done, which might be one of the more, yeah, is probably the interesting aspect of the story. Not, I mean, it is, of course, a huge success. Let's not forget that. I mean, that is actually probably the main theme here. We don't, it always seems like investigators and people in security are on the back foot, but here is some very good news and a lot of hard work by a lot of, yeah, enthusiastic, hardworking people trying to fight pig butchering and the Southeast Asia uh, crime conglomerates that are working in this space. So yeah, I don't know about you, but my LinkedIn is like full of the story and people working on it. I think comes to mind is like the Operation Shamrock Group and Aaron West. That was like their main focus is these scam compounds in Cambodia and elsewhere in Southeast Asia. So credit to them for bringing this to the forefront and on investigators and security professionals' minds. And yeah, a reason to celebrate. It's a huge Caesar. The thing is, Shen Zi, the chair of this Prince group that was responsible, is still at large, I believe, if I'm not mistaken. So he has not been arrested, but the crypto has been seized, apparently. So that's a bit of the background. Anything I'm missing there from the background, or?
No, not really. Yeah, just the fact. Yeah, you mentioned it also. The collaboration between the U.S. government and the UK, and then there were a bunch of sanctions that also came up with that specific seizures. Like a bunch of addresses were sanctioned, a bunch of entities were also sanctioned. Obviously, everything related to the Prince Group holdings. I think it's what it's called. Uh, but yeah, I don't think you missed out anything else. I think there are a lot of articles about it out there, like so many at this point. But I think certain things which I would love to sort of also point out, like number one, is still a seizure, which means yes, it's within the controls of the US government, but there's always going to be like a what's it called, forfeiture process where um the founder, Shenzi, possibly would have to defend it in court of law, show ownership and legitimacy to the funds and things of that nature. And if all of those stuffs cannot be validated, then there will be the forfeiture process where it would now, by law, belongs to the US government. Yeah, well, I'd assume the US government and the UK government in a way, but and then there's going to be all of the restitutions or things that comes after it with having to give back some of those funds to victims. So I think there's still a bit of long process involved, but yeah, it's a good one. It's very nice to hear something like this, and it's for a long time. It's felt more like it is an open secret of this is what is happening in this region, and nobody is doing anything about it. But from the look of things, people are actually doing stuff about it, and they came out
Yeah,
with a very
exactly.
big news.
Yeah, exactly. Yeah, kudos to no, yeah, credit and my I want to say heart because that's really too much, but yeah, I feel really good for those who've worked so hard and trying to fight crime in this area. This is certainly a huge win for them. I don't really know too many person. Well, I guess we spoke with William on the podcast recently. I think he's involved with Operation Shamrock, and
Hmm.
anyways, I see them all. I mutual connections, of course, and people that were all involved with this deserve to have a strong pat on the back for sure. But regarding other details about it, because like loot the apparently also associated with the seizure and the wallets involved, the Lubine, or am I mispronouncing that?
Yeah,
Lubane,
Lubian. Yeah.
um, Lubian, sorry. Mining, Chinese mining group, which supposedly had the biggest theft ever. Some of these, yeah, these bitcoins were associated with the seized Bitcoin. And furthermore, there's a lot of mystery of how the US government seized these assets as well. It appears like through some sleuthing and investigations. Taylor from like MetaMask, she's big on LinkedIn and does a lot of great stuff. Yeah, was looking into it and documenting it pretty well, and basically came to the conclusion, long story short, of it seems someone about uh in as early as like 2020 cracked the wallet. This being because in early Bitcoin wallets, the entropy of
Yeah.
the passkey was much simpler and easier to crack. You could actually do it because it's something like only like 32 bits or something like that, and like yeah, exactly. And so apparently these wallets were kept with a very weak entropy, and apparently someone cracked it. So it depends if it's the way it was seized seems a bit odd, according to Taylor's tweets. Odd in the sense that it was not typical of how the U.S. government would seize something. So there's some weird theories of, whether the U.S. government was able to hack these wallets and the passkey, or potentially a different hacker or different actor, such as like a private security firm or some other entity, cracked the wallets back in like 2020 and then eventually gave it to the US government, potentially in 2024, which is what the flow of funds sort of yeah, convey, which is crazy because it means that someone like sat quiet on the received funds for like 3+ years and then maybe eventually made a deal with the US government, if it was not already the US government, and those went to the the wallet addresses that they currently exist at in like the summer of 2024, and then it wasn't even really announced or publicized until just this week. So kind of an interesting timeline, and
Yeah.
um yeah, a lot of like some unknown answers or unknown questions um involved with how it was seized.
I think
Super
also,
interesting, actually.
yeah, I think also like the fact that so in a way, like you very hardly see an overlap between mining and like scams or pickpocketing, so to speak, right? And this also sort of like calls out the question that are these funds necessarily the funds that victim lost through scams, or if it's very related, if it's the same funds as the Libyan arc, then that is basically coming from a mining company. So yeah, there could be the fact that Libyan itself is controlled by Prince Group. We'll get all of these details later on, which means most likely means like the Prince Group was using stolen funds to fund Libyan operation, and then in a way to try to make the funds clean while mining Bitcoin that's all effectively clean, so to speak, right? But like I think there is so many details out of this that we don't know yet. Maybe one thing we can obviously do possibly be bring in someone that is very much involved and at least speak to it as much as they can, because like I'm very sure a bunch of these details of this case is still very much on a need to know basis.
Yeah, definitely. Definitely. No, there's a lot of unknowns here that maybe we'll get more answers to as time comes. But yeah, maybe a interview topic for someone we can have.
Yeah, cool. Yeah, we'll definitely keep our hands on it. So, and also, kind of like moving quickly, not very related, right? But moving quickly to another big news of the week, past 2 weeks. There is a news about like a crypto crash that happened so very close to when Trump announced a Chinese trade tariff increase. I believe that it was 200% or something. And in a way, although it wasn't like really this the same thing, but in a way, it sort of like felt like because Trump announced that it affected the crypto market. From the look of things, it was a very different thing entirely. It has to do with like one very specific company, which in a way sort of like affected the market. It's very it's not very clear on like what caused it and why it happened and things of that nature. But what we're referring to is like the fact that Binance has agreed, or maybe not agreed, but Binance pays out 283 million USD as compensation following the pegs of certain tokens on their platforms. Um, and these tokens are basically three. I assume they are. Let me quickly read. Binance executive apologized. I actually saw their uh, CEO's apology on LinkedIn, which was like a first for me. After markets downturn apparently triggered assets in three Binance end markets. Ethereum stablecoin USD, Binance issued Solana liquid staking token BN Sol, and Route Beacon liquid staking token WBET. Now, at some point we get to when we are sort of like mentioning token names, and then WB we use all of the alphabets very soon.
Yeah,
But
yeah,
yeah,
yeah.
there was that the peg in these three tokens, and I think USD is like a synthetic stablecoin, which well from their conversation, this like they are not like yeah, they are not backed by fiat or anything from the US markets, but generally just if a bunch of crypto assets on tokens, basically Bitcoin and the likes. There was a JPEG, which was sort of like reference to have happened due to the fact that Binance was using their own specific oracle and was not getting information from the whole ecosystem. Yeah, a bit of blame game here and there, and at the same time, a bit of like, okay, we're taking blame on this side, but that is not exactly what happened. It's just a bunch of things altogether. But yeah, what's your take on it?
Yeah, it's just interesting because I'm sure most people were a little bit late to this story, but yeah, last week the crypto market crashed a good bit. It did seem it was triggered by the tariff announcement from the US president about, yeah, going 100% tariffs, percentage tariffs on China. And, but it actually, the market itself didn't crash too bad, at least in regards to Bitcoin and Ethereum. But, it exposed over leveraged
Mm,
traders and investors in the market, which were a lot, like way more than yeah, a lot, and I think over, like, $19 billion were
wiped
basically
out.
destroyed or wiped out, from people being over leveraged. If you don't know what over leveraged is, it's, I don't really use it myself, but essentially if you take $1,000 worth of like Ethereum and you want to take a 10x leverage, then that would go to like, yeah, I think a 10,000 or 100,000. No,
I
yeah,
have no idea.
10,000 amount. Yeah, 10,000 amount. And then, but it's at a very high risk. So if the market drops, then you get liquidated to if
Mhm.
it drops 10%. So it's a risky way of investing and trading. And if it drops a little bit and there's a lot of people that are using leverage, then it'll wipe out more people. And I think it's called like an over leverage. What's the word? Cascade, over leverage cascade. And yeah, it's something that just grows exponentially. As more people are leveraged, the harder this liquidation would be. So yeah, biggest liquidation ever, like even more so than the FTX crash or more so than the COVID crash. I think those were only like 1 or 2 billion or something like that. So yeah, pretty historic in that sense, and certainly a lot of damage done. Um, and this affected Binance and a lot of market makers on different exchanges, but particularly Binance. And for example, Athena's like stablecoin USDE fell to like 0.66. It's supposed to be $1. And this affected a lot of trades, and people trying to uh, whether take out funds, et cetera, things like this. So yeah, depegging over not just USDE, but a few other assets. And Binance decided to step in and refund users in this sense. So up to, what was the amount? There was a,
So it's a three.
yeah, $283 million. So yeah, kind of crazy story. There's a lot of, it's not just Binance, a lot of other places in the market and DeFi, decentralized exchanges, yeah, got pretty rattled from this, and probably it sounds like it wiped out a lot of like smaller market makers and
Mm.
really shook up the infrastructure of the crypto capital industry. So let's see where it goes from here. But
Y-
yeah.
Yeah, like, and I think so. Like talking, if kind of talking a little bit more about the course. I think there are a lot of course. Like from what people are saying, there is the U.S. President's announcement regarding China. There was the aspect of USD, Eternal Labs, sort of like coming out and saying Binance were not using, they were using their own specific oracle, so they were not getting information about how their token was actually doing in the ecosystem. So it's only affected that specific platform. Then Ave mentioning like they've never processed funds in that period, or they've never processed funds as much as they did in that period. So there was a lot of like, okay, the market was still very stable, but at the same time, it seemed like certain people, excuse me, were like, oh, because at some point I heard that Ave actually had coded USD to USDT just so they don't use any form of like Oracle. So they just kind of like pick directly from USDT. So they kind of like do that coding function. Some say it's not the right way. Others are saying, yeah, that's the way to go if you want to have like a very stable ecosystem. And then at the same time, there was the Oracle issue with Binance that they pegged USD on their platform. So it's, and then Etina itself coming out and saying like they actually processed all of the funds that were requested at that period. Nothing happened to them operationally, internally. So it was only sort of like within a Binance ecosystem stuff. But I think one thing it sort of shows, in my opinion, is like the ecosystem, regardless of 14, 15 years that it has been on, it is still very, very new. Um, there are a lot of things that are moving here and there that could cascade from one thing and then something else would obviously just go south, and people over leveraging. I don't know what to say about that. I think it's so many things in one. yeah, trying to make money off zero money. In
Yeah.
a way, it sounds more like gambling, but yeah, I think the space is also known for that in a way. A little bit about same thing that happened to Luna was also the fact that a lot of people were like over leveraging, and then there was the bank run, and then Luna couldn't settle, and then token went south, things of that. I think the ecosystem is still learning from some of these things, trying to figure out what is the best approach. But I generally don't think this is going to be the last of it.
No, no, not at all. Lesson learned for some people, hopefully, to not be over leveraged. And it's really bad. I think, is it Warren Buffett that has like some quote about, or Charlie Munger about leverage? It's something along the line like leverage is the, antithesis of like healthy markets or something like this, and how it's really a big problem and creates a lot of risk and unhealthy work and the flow of way capital markets should work. Um, yeah, I've never used leverage, but it's super risky, and you see like people posting about on Twitter and stuff like how they lost all their money. Um, yeah, it's kind of one way it's kind of sad, another way it's like, well, you gotta probably not put all your money on leverage positions in crypto. But yeah,
I think
so anyways,
one sad news that like I really did not read much about that news was the fact that the Ukrainian founder, there was one Ukrainian guy who sort of like committed
yeah.
suicide in this process, and I think there's more to life than that, to be honest. But yeah, I think that was one very sad news that's yeah came out of it.
Yeah, that was a really sad story. Yeah, and that happened just this past week, I think, like after this crash,
Yeah,
correct? I believe. Yeah,
yeah,
exactly. Yeah, it's like really sad and kind of, like this kind of twisted irony in it that I think they found him dead in his like Lamborghini, if I'm not mistaken, which is like, I don't know, there's kind of like some symbolism there of like, I don't like, yeah, people need to keep things in perspective. There's a lot of crazy gains and ups and downs and volatility in crypto, but yeah, you need to diversify hopefully, and not just your assets and investment or what you're involved with, but also just in life in general, and not make it everything. But yeah, I did read that story. That was really sad. Yeah.
All right, we're going to take a very short break now and then come back with our two ending stories. Welcome back on this episode of Tristan Theory, Ade and Joe, and we're going to continue the conversation. And this time around, we're talking about an exploit um, that was announced or sort of like maybe publicized by PegShield. PegShield is a blockchain security firm. They're very, very vocal on Twitter or X as it's called now. And then they mentioned or they published that like there was like a $21 million crypto theft that happened or that is tied to Hyperliquid. But just to be clear, this is not like an Hyperliquid exploit, but essentially a user on Hyperliquid lost $21 million in their funds. Yeah. Was the story like, Joe?
Yeah, I mean, pretty straightforward story, but it was one of the bigger thefts this past week. 21 million from a private wallet and EOA, and yeah, I mean, here probably the big takeaway is, you know, uh, keep private keys secured. And it seems or appears that likely this wallet was a warm wallet. So maybe, um, yeah, like a MetaMask that's on your browser and potentially not a hard wallet. To be fair, I'm kind of speculating a little bit, but usually if something's compromised like that, it's
Yeah.
probably a warm wallet. It's much difficult, um, to nearly impossible to like hack a hard wallet unless you like, wrench attack or get the private keys some other way, like leaking from something. But
Like the Bybit
yeah,
case.
so yeah, exactly, or like the Bybit case or something like that. But yeah, so the reminder here is, if you're going to have a lot of money, certainly should not keep it on a warm wallet that's connected to the internet. Keep it on cold storage in a hardware wallet. Yeah, just something that is always worth reiterating. And I guess secondly, I don't know, it ties in with Hyperliquid, super popular
Hmm.
decks, as I'm aware. There's some special features to it. To be honest with you, I'm not 100% sure.
They're more into the perpetuals. They kind of like call it
Perpetuals,
clubs
okay.
here. So yeah.
Yeah, exactly. So I mean, it's one of the big projects of 2025, and yeah, I think they're almost like top 10 market cap or something like this now. And yeah, so that's the story there, basically. Yeah, I know the industry always harps on, not your keys, not your crypto, but even from personal experience, yeah, you may not trust a bank or someone else custodying your crypto, but do you trust yourself? That's something everyone should ask for when they're keeping $21 million in crypto, I think. Um, yeah, it's an interesting philosophical question that I always kind of come back to in this space.
Yeah. And I think also in addition to that, I think the fact that there is potentially not very known efforts in sort of like, I think there are, but I think a lot of people are not actually being cognizant of like what security generally should look like when it comes to some of these funds here. The 21 million could have been like an operating fund, to be honest. Like they just buy off Hyperliquid, and it was just a case at that point where the exploit happened, right? So yeah, a lot of people trade that value almost every day. So to them, it might just be like an operating funds and not necessarily like their treasury, so to speak. But 22 million is still a lot. And I think, yeah, as you said, like it underscores the fact that there is need for us to have more crypto security awareness that is just outside of like having your private keys on like a password manager. It definitely should go beyond that, and operationally it should. But I think something else which I also noticed or I read regarding this case is like someone posted on Twitter that there is also a little bit of uh, Hyperliquid fault in this, in the sense that like the way Hyperliquid functions or logic are being set means like you can actually sign a transaction on one chain, and then you can carry that transaction, sign transaction to another chain to execute. In kind of like layman's term, is just more like saying like I can give you a cash signed or a check signed that you should cash it at bank A. And instead of you taking it to bank A, you take it to bank B, and bank B is saying like, "Oh, it's the same signature," and then they will cash it out for you. So we saw like that doesn't really it shouldn't be the approach. But I think there is that there also. But I also kind of like keep a tab on that to actually see how that goes. But again, the security in the space would keep on evolving. It's obviously going to get better from here, but I think at that point we are still at the point where it feels like, yeah, a lot of things are still sort of like standing on one leg rather than having two legs, right? But it's and in a way, this also looking at it from like a business point of view, it's in a way gives some bit of like advantages to their main competitor, which is like Asta. And I think Asta is the one that is has been sort of like linked to CZ. Because
Uh,
obviously the space is also growing. Perpetuals Dex is it's kind of like the next thing is like the NFT of 2025 after stable coins.
yeah.
We'll see how all of this goes. But yeah, any last word on this one before we move to the next?
No, no. I mean, yeah, maybe another. I don't know if this was a enterprise or like a business behind it or just an individual, but yeah, one thing if for people who are interested in like wallet security and this skill set, which custodian type of businesses need from someone within their operations. There are some cool like courses out now, and this I think especially after the Bybit hack earlier this
Mhm.
year, this is been a big theme for 2025. For me personally, I looked at this course on Updraft, Cypher and Updraft. I can highly recommend them, but and it's for free. They have like a little thing on like wallet security, and you can do a little like quiz testing your knowledge on best practices and things like that. So anyone interested more in private keys security and wallet security, I'd recommend that.
Yeah, definitely. Yeah, ciphering is a good one. The fact that it's free, it's so like it's a no-brainer. Even if you have certain security in place, like still check it and see if like there is something you are missing, and you can just add it to what you already know. Cool. And over to our last conversation, our last topic of today. It's also like a very different story entirely. So this is about someone called Bitcoin Jesus, Rujava, and the story is that they have reached a tentative deal with DOJ over a $48 million tax case. Basically, this particular individual made their money in crypto before crypto became a thing, before it became like what we know it now, and they were not declaring those profits, and because of that, the US IRS was IRS Internal Revenue Service, I believe. So I caught up with them, arrested them, and then they sort of like struck a deal that they would need to pay $48 million in charges for the crypto gains that they did not communicate to the tax body. Which always puts a bunch of things into question. Well, not necessarily into question, but like certain years you start getting picked right now in terms of like, okay, my crypto holdings, what exactly am I doing with it? How am I declaring it? What is the regulation within my jurisdiction saying about crypto holdings or gains from crypto holdings? Like, right. But yeah, what do you think about this case?
Yeah, it's interesting because Roger Ver is a bit of a known figure, especially with people who were involved in Bitcoin early and like 2010-ish through up to 2020 and those kind of cowboy days of the crypto market. And I think he's the one that he had some spat with some other folks about. I think he was it him that was claiming he was Satoshi Nakamoto, or he was telling other people or something like this. He was in some sort of like fraudulent story about whether or not I think he was Satoshi Nakamoto or he was claiming someone else was. Um, yeah, I don't know if you remember that, but
Nah.
uh,
I
yeah,
think all of those guys that claims to be Satoshi, like once I see the headline, I just skip.
yeah, exactly. Anyways, this guy's certainly a character, like, and yeah, he was charged in 2024, April of 2024, with mail fraud, tax evasion, filing false tax returns, and yeah, it looks like they should be coming to a deal where, um, yeah, I think he'd pay. Yeah, they're in a tentative agreement, and Roger Ver would pay close to $48 million in dollars. There's some speculation about, because Trump, what's the word, pardoned like the Silk Road guy, Ross
Mhm.
Ulbricht, and yeah, he's pardoned other people for other stuff. So there's like some hope that at least from the Bitcoin community and that kind of crowd, the early adopters, to maybe pardon Ver because they're on his side of this story. But yeah, I think even Polymarket, Roger Ver receiving a pardon from Trump went from 23% to 29%. So depends on your opinion there. If you think crime should be legal, then I guess maybe you're on Roger Ver's side, but that seems to be a theme as of late. But yeah, I don't know. So it's a little interesting because like the new administration, everything like pardoning people, gutting the IRS, like being all crypto positive, and Trump family involved, blah blah blah, and there seems to be still some sort of enforcement of you're not allowed to evade taxes and this sort of thing. So
Yeah.
that's maybe a
I
good reminder the law still exists in some respect. Yeah.
Yeah, I actually don't see. I don't see a pardon in this case on what the individual is going to pay. Maybe on them serving a jail sentence. Because at the end of the day, if the 48 million is going to be in the treasury, US treasury, why would a president want to pardon that? Guy, you have to pay. On the aspect of you going to jail, yeah, okay, maybe a reduced sentence or whatever. But like, I genuinely do not see like a pardon on, oh, you don't have to pay this amount. But yeah, I'm not a political person. I'm not a political analyst. I kind of feel like it's a little bit different from the Rosie Brief case in a way. Yeah, it's actually very different. Like this is tax evasion. Like uh, yeah, they are all crimes at the end of the day, but context of it is a little bit different. So I think that's my thought on this. So, but I think one other question which I have on this is like, um, US generally kind of like start some of these things in terms of like sanctioning or arresting someone or getting someone to uh or suing someone or things of that nature when it comes to like crypto cases and the likes, right? What I am seeing is like I am of the opinion we start seeing a pattern where certain countries will start going after crypto holders and like, oh, you've not declared this amount, this portfolio in the past. Like, can you share your not your transaction history from this exchange, or what are the wallets that you have? Can we see it so that we can know how much you're owing in tax and things of that nature, right? I know that certain countries have specific requirements or regulations around it. Like I think for like Portugal, like if you don't spend if you hold your crypto holdings or maybe the capital gain on your crypto holdings for more than 12 years, it is tax free. Oh, sorry, 12 months rather, it is tax free. I think for Nigeria, like they only tax the capital gains on any of the instruments you trade. So, like, and again, if you take that specific capital gain and you do not withdraw it in form of fiat and then so like put it back into another instrument, they are not going to tax it. So at least I know those two. I think Estonia also has a little bit of around like requirements or regulations around crypto holdings and the like. So I think a lot of countries would have, except maybe like for the Dubai, that is like zero tax across board, at least to some certain degrees. But I think we'll start seeing more of these cases around tax evasions when it comes to crypto, especially with how anybody can read anything on the blockchain. And there are a lot of doxed accounts. They'll probably start with all of those doxed accounts and like, okay, this does not match what you are presenting to IRS. So I think we get to see more of that. Yeah. What's your take?
Yeah, I think in some sense, it depends what jurisdiction and what
Mm-hmm.
you're talking about. Like in the US, they're like, you know, getting rid of like the gutting of the IRS and this sort of thing. It's not, yeah. Uh, Trying to nip up the tax, people evading tax, I don't think is really the theme as of late. But there are a lot of like companies coming around that do like the software that can analyze wallets, and there seems to be a big market growing there. Um, yeah, so yeah, and as time goes on, this will be more established, I guess, or more mature, like a more mature industry. Um, yeah, yeah, I think people there's a crowd that are wanting people to not evade taxes, and I don't know, it's a weird thing because like a lot of like cypherpunk, like on-chain purists are like probably not like so interested in this topic, maybe, and then um yeah, I don't know. There's a big debate of like a fight between, I think, making things more transparent and people paying the right taxes and people wanting to be like anonymous and private and this sort of thing. Because now, I mean, there's this Ethereum's coming out with all these privacy features and they're
Mm-hmm.
super, that's going to, that's another day for another discussion, but that can play a role in uh, keeping people from paying the right taxes. But anyways, yeah, let's see. I think it's still part of this whole industry that needs developing, and it'll get more mature. And yeah, I think as time goes on, more cases will come around.
Definitely. Yeah, I agree. And yeah, so on all of the focuses, sorry, the four topics we've discussed today, we'll keep pause on them from the Cambodian case to the Hyperliquid to the Binance and to the stocks. I think we'll get to hear more about all of these things in the coming weeks, and we definitely keep our eyes peeled on what is happening in the spaces. But yeah, final words before we end it.
No, I think yeah, interesting week. You know, good story in the seizure, and um, yeah, we'll see what happens the next 2 weeks, and we look forward to talking with everyone then.
Cool. Yeah. Thank you guys for listening to us yap about crypto, and hopefully you've learned one or two things. So yeah, I'll catch you guys next time. Peace. Bye for now.